Welcome, 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 fellow traders, degens, and legends. First of all, if I could just get a quick audio visual check, guys. Charts look good. Don't sound like a robot or anything like that. Interesting couple days we've had in Bitcoin, you guys. Let's make sure that you guys can, in fact, hear me, and then we will go from there. A lot to go over. Audio good, right on. Thank you, thank you. Yeah, thank you for that, guys. Well, guys, massive volatility for Bitcoin over the past couple of days. For those of you who have joined my last few streams, both here on Financial Summit as well as my own YouTube channel, hopefully you were able to take my warning seriously and hopefully even make some profit trading the downside, because I know a lot of people were blindsided by this move and very upset about it. But guys, basically, since we broke 53,000 US dollars support, I have some bad news. The way I'm seeing things from a very, very basic structure point, we now have basically set a lower low and another lower low, confirming a lower high. Specific times of interest are the 4-hour and the weekly for me personally. Now, to be perfectly clear, I wouldn't be too surprised to see a temporary bottom here, just like we've done in the past, like back here. Again, very basic structure on this 4-hour chart that even if we bounce from here, I don't necessarily think that this trend is over. I think a relief rally is more than expected at any point now, but this has been enormous selling pressure lately. But check this out as far as just a basic structure level, guys, here. This is kind of, when you really break it down, this is day one technical analysis here, just basic structures and a trend of lower lows, lower highs. Basically ever since, when did we first break this low? Back at the early May. Basically, that's where I'm looking at this trend as it kind of ended to the upside. We started forming some bearish structure. We get this, we break past this low. We had this good buying pressure back here. So a nice low pivot point here for this range here. We end up setting a lower low. At that point, that's where I pull a Fibonacci, right? This is what I've been teaching on all my streams lately, how much I love using Fibonacci's after a structure break. And here's a perfect example. We set the lower low. I pull my Fibonacci from the top to the bottom of the range, and we end up finding perfect resistance right in that 786, 886 Fibonacci pocket. From there, we end up breaking that lower low, setting another lower low. Well, I take a Fibonacci pull from the lower high, the highest point between those two, and look where we end up finding resistance, right pinpoint accurate in that 786, 886 Fibonacci pocket. And that's why I've been quite vocally bearish to a point where nobody wanted to listen to me anymore. But this was all just very concerning to me. I think it was early July, I made a prediction that even though I thought it was very likely we found a bounce here, I thought that around that $68,000, $70,000 level, we were going to just basically get absolutely hammered to the downside. And that's absolutely what happened. And that was nothing crazy. There was a perfect sell the news event with Trump going and speaking and hyping up the whole Bitcoin community and stuff like that. I mean, the price action that did have on the market, that's a buy the rumor kind of a thing, right? I mean, we pushed the price to the upside there. And right before he went and spoke, we basically came in contact with that 886. Again, absolutely perfectly, and ended up nuking from there. So I was targeting the fib pull that I had. Where was my target there? When I pull that, so basically I'm looking at entering 786, 886 and looking for the move down to the 214 fib. So we obviously blew right past that. We blew past double bottom territory even. Now, the concerning thing with this, you guys, is that even if we end up bouncing here, because again, it would make total sense. That's what we've done in the past, right? We sweep our lows, we break our structure, we get that pullback. Everyone FOMOs into resistance once again. We get the move to the downside, we break structure again, we get our retrace back into resistance where everyone starts FOMOing again and dump to the downside. So now we've broke that structure once again. So yes, it's absolutely possible that we see some kind of a bounce here, but unfortunately, I am still bearish. I mean, that's not to say we won't bounce a little bit, but I'm more so interested that to me, this doesn't look like a final shakeout is my only problem, you guys. Yeah, it's absolutely possible this is the bottom. That's the thing. When it comes to trading, no matter how sure you are about something, always understand that you can be wrong because the market doesn't give a shit about our feelings or our emotions. And just always have a backup plan. What happens if you're wrong? Have invalidation levels and all that sort of thing. All that I ask for myself to be invalidated, and I will get bullish just like the next guy once again, is just break our lower high structure. And unfortunately, Bitcoin hasn't been able to do that. So the trend is still to the downside for me. That's not to say I won't trade any long positions, because again, I absolutely see reasons why we could end up pumping to the upside. But even if I start trading to the bullish side of things temporarily, I am more so open to the idea of a further nuke if we do end up testing up here. I'm not positive we're going to get up there this time. I was fairly confident when we had this setup that we were going to make it up to these levels. And my reasoning for that was basically that as we got this pullback here, we had this massive overextended bullish RSI divergence. And that lined up perfectly with a 786 fib pull, something like that. So the fact that we were basically targeting double bottom territory with significantly more strength just made me think that, hey, I absolutely think this is a period or just grounds for a temporary relief rally. But when we get to that macro resistance, it's time to be careful again, right? It's time to look at resistance for what it is. Resistance is resistance until it's broken, just like support is support until it's broken. And unfortunately, in this case, support was broken. Even if it was just briefly, there is candle body closes below this level here. And to me, that seems like a very obvious bearish structure break. But like I said, I do see potential for some upside. And basically my reasoning for that is, again, we just have this perfect setup to get that deep overextended bullish RSI divergence. So if we end up getting something like that, let's say on a shorter time frame, we end up getting a pullback, let's say something like this would be great, in my opinion. We come down to that level and we get some sort of a structure break like that, while our RSI gets, a bullish divergence, something like that. So basically looking at it as going from extremely overextended to where we get my favorite Fibonacci levels with a very bullish RSI divergence, something like that. That would be a good sign, in my opinion, that we may end up going higher. And in that case, I would be midterm bullish kind of a thing. But again, with a target in mind, basically, when we get back to that macro super fib level, I'm going to be hands off. I'm going to be cautious. I'm going to be looking at a bearish approach once again, if we do get up to that level. Something concerning right now, in my opinion, is if we actually here, I'm going to go over to the 1 hour chart, and something that caught my eye earlier is basically, let me just go with a naked chart, basically no indicators. Remove some of these as well, is as far as basic structure goes on this very immediate trend, right? Just looking at the 1 hour, we had these couple structure breaks, just absolutely nuked to the downside over the last couple days. Basically our last structure break here is down here, right? I'm looking at this as our low, and we did end up getting a lower low. The highest point between the two is this level here. And although we did test above it very briefly, that does just look more to me like it's possibly just a liquidity grab of some kind. If we would have got some candle bodies closing above this level, I would have been actually a little bit more bullish right now. And not to say that we can't blast through resistance right now, just something to put on your radar as just to be cautious of is if this downtrend does continue here, that's a perfect swing fail where we just came up to that, basically just that lower high structure and just ended up getting rejected there. So something to be a little bit cautious of there. I want to hop back over to the 1 minute chart here. Something that did catch my eye very recently here. This is actually a good example of the exact opposite situation, right? Again, very micro analyzing here, but basically looking at this as a little low because we have our green candle here and a lower low. Again, this is 1 minute trading, you guys. This is scalping. looking at very micro analyzing with this kind of a thing. So take it for what it is. But as just micro analyzing that, that's our low, lower, low, lower, high. We end up breaking this green line here. And you know where I'm going with this already. Just that setup that I've been teaching on all of these streams here is we pull a Fibonacci after a little break like that, and we come back to the 786, 886 so perfectly so often. Again, it's not going to play out every time, obviously. Nothing like that. No trade setup ever does. But that's one of my favorite things to look for. And that goes for basically any time frame, right? I look for those on the 1 minute all the time. I look for them on the 5 minute, the 1 hour, the 4 hour, all of it. And that's exactly why I was able to hold on to such a bearish bias while the rest of the market was getting so bullish as we were trading into resistance. I basically looked at this. I took a step back, zoom out a little bit. And at the end of the day, it's just a structure break, pulling back to my 786, 886 fib pocket and looking for a short opportunity there. Because if I short that every single time I see it basically on a 1 minute or a 5 minute, why would I ignore it on a weekly chart or on a 4 hour chart? And more importantly, why would I ignore that on a weekly chart? I had the exact same thing basically. Well, yeah, this is just zoomed out. It's the same chart, right? So basically had the same thing where we lost a couple structure levels, pulled back to those 786, 886s and absolutely nuking. And the reason why this one really concerned me on the weekly chart, you guys, and this is why I've been so bearish since mid-June basically, is because of the RSI divergence that went with it. And just like I was pointing out for the upside on the 1 hour chart that I was looking for, getting some sort of a bullish RSI here. It's basically just the exact opposite on the weekly chart here, right? So that's why I was so bearish, because that's a very powerful signal. When you have a structure break mixed with significantly less strength going into the same resistance level, I mean, it's absolutely no wonder why we ended up getting rejected so hard here, especially while the market was, getting so much FOMO and stuff like that. Even right now, you guys, the market's over 70% long, even after we're just getting absolutely hammered like this. When retail generally isn't on the correct side of things. Yes, it happens from time to time. But it's just something to consider, that's potentially more fuel for the market makers to just grab on the way to the downside. And actually, speaking of market makers and liquidations and stuff, I can bring up the liquidation indicators. And this is actually another reason why I think we're due for a little bit of a bounce. Here, let me remove some drawings here. So this is with the MDX ALGO indicators here. This is a liquidations indicator. So this is basically, I have it set up to all these yellow and gold lines here are liquidation levels for 50 and 100x trades. So basically what we see here is the market maker loves to grab that liquidity, right? So as we ended up trading to the downside here, as we traded down, people were FOMO shorting into this move here basically, and just creating a big amount of liquidity for liquidations above us. And eventually when we grabbed all the levels to the downside, that's when the market maker decided, hey, there's a whole bunch of liquidity above us. Notice the price ends up pumping to the upside. We grab most of it. And then all of a sudden we see liquidity starting to pile up to the downside. And I'd mentioned that in my last stream too, that it was lining up right around that 58K. We actually went further. Look, and actually just look at that. Look where we went to. The market maker went just to grab that last little bit of liquidity. Now we're starting to see that people are FOMO shorting into this move, thinking we're going straight to zero because nobody likes waiting for retraces. They just want to play the breakouts because markets only move one direction, right? But basically, people are starting to FOMO short into this, and we're starting to see those liquidations build into the upside. So that's another reason why I think we could pump to the upside a little bit. And just kind of pulling a Fibonacci in that case, you can see that most of the liquidity does end up right around that 786, 886 fib pocket. So it's pretty funny how that happens to line up so often. But just basically a few reasons why I think it's definitely worth considering that we could get some sort of relief before, even if we are going to carry on to the downside, right? Another thing that I had pointed out in the last video was I felt a little bit validated that things were going to get quite bearish, just because with these indicators and with the Trendmaster indicator, I really like to see what direction these signals are trending. So the fact that we changed trends and we ended up setting a lower buy signal here, as well as a lower sell signal here. So it's not so much that I take each individual signal, but I really like to use these indicators to help me spot out a trend. And that's one of my favorite ways to do so. So the fact that I got that confirmation that, hey, after testing the 786, 886 fib pocket there, after a bearish structure break, the indicators are also lining up that they're starting to shift to the downside. And we just absolutely nuked from there. So even now, we're going to have to see what happens. If we set some sort of, we get up there very quickly and we set a higher buy signal, then, we have to start being a little bit cautious. Hey, maybe things are going to actually start trending to the upside. That's absolutely possible at that point. We're basically at a level in the market where we got to start being careful. Just because, even though I'm bearish, my targets were reached, right? Yes, we broke them and now we have to see what happens, but I'm open to the idea of that retrace now. So we just have to be a little bit cautious moving forward, right? Yeah, I've been basically lately, I've been trading mostly just basic market structure. And from there, I like to use these MDX ALGO indicators just as a bit of additional confluence. Just adding confidence to my position, basically looking for a second opinion on my positions, sort of a thing. So yeah, if that is something that interests you, if you guys like the way I use these indicators in these live streams and that sort of thing, there is an additional 10% discount down below if you use my link. And that's on top of current promotions currently going on with MDX ALGO. So yeah, very cool indicators there. I've been using them for about 2 years now. Basically the only other indicator I use is the RSI, just because I have a very specific divergence I look for on it. But there's beefed up versions of the RSI and everything in there. And there's so many indicators I don't even use. They all have very unique purposes. I just keep my trading very simple. So not only that, they obviously make my charts look absolutely beautiful. So yeah, absolutely love them. So yeah, if that's something that interests you, there is that link down below. So yeah, we'll check out, let's hop right over here. We can see that we are still flirting with that resistance on the 1 hour. Honestly, at this point, I'm a little hesitant to take a position either way. Just because it just kind of looks like, like I said, there's reasons to believe that we would make a push to the upside. The only thing is, after such a big move, I don't really want to feel like I'm catching the knife. I would really like to see some sort of a confirmation that we break above that lower high resistance and then get a pull back down. And then, at that point, I would actually be considering getting bullish at that point. I'd pull a Fibonacci, look at that, just eyeballing. It becomes so natural to see those 786s, but that's more so what I'd be looking for. Get a break of structure and then a bullish pullback. I would feel very different about that than if we just pull back right now without breaking that structure, just because, in my opinion, that's looking just like a little bit of weakness because we never actually broke the lower high structure, right? Nothing but a little wick there. Let's see what the indicators are saying on the 1 hour. Funny that the Trendmaster indicator, you can see that it's showing resistance right at here. Let me remove some drawings. But yeah, beautiful sell signal on the 1 hour. Holy crap. And just look at how well that resistance lines up with our just naked market structure. If I remove all the indicators, that's our lower high structure, and just notice where that Trendmaster indicator is showing resistance. So a couple things, like no matter what, at the end of the day, Bitcoin, in my opinion, not in a very good position. Yes, absolutely possible it bounces a little bit, but something to consider as well, you guys, is that when I go back to this 4 hour chart, is that, how many times are we going to break this structure before we actually get a breakout move, right? Because there's a reason why a lot of people look for those breakout moves, because they happen so quickly and violently. The thing is, so far, we've just been doing even though these sell-offs seem like they feel ridiculous because they're a fairly big swing and the market's nice and volatile. But at the end of the day, we're just barely breaking structure and then retracing. I mean, very rangy when you look at it. Not a massive breakout to the downside by any means. So the fact that we continue setting these lower lows and lower highs, at what point is the market just going to absolutely panic and get some sort of a breakout? Again, it does not have to happen. I want to be very clear about that. When it comes to trading, it's way more important to be able to react than predict anyways. But just throwing it out there, it's always good to be aware of basically anything, right? You always want to be ready for what happens if I'm wrong on this idea, on this theory, on this trade setup. What's the worst case scenario? Just going through a few comments here. Oh, I see a few familiar faces here. Welcome, guys. Thank you for tuning in. Bullish divergence forming on the weekly time frame. I will go check that out in a second here. My only thing with the RSI, I just assume you're talking about a bullish divergence on the RSI, is I don't look for every divergence, to be honest, because really searching for divergences can really make you force trades. There's a very specific one that I look for. Yes, if the RSI, like I said, on the, let's just say on this one, the fact that the RSI went extremely oversold here, and if we get a divergence that's something like that, that's the exact divergence that I like to look for, just because I've done a lot of back testing with that and had a lot of success with that. And that's been basically my favorite divergence to look for over the last 4 years or so. But as far as just regular divergences and stuff, is I mean, I always go market structure first, and then I look at indicators for confluence second. And I think a lot of people look at indicators trying to force signals. But I think at the end of the day, market structure first, and then looking for that second opinion out of any indicator after that, kind of a thing. But everyone has their own trading strategies, right? And that's why it's important to do back testing. When you are coming up with a trading strategy, go back, use the replay. Where is it? The replay feature on TradingView, and just write out a set of rules. Go back and write out a set of rules. You need all this criteria to play out. And if it does, you're going to take a trade here. Here's your take profit. Here's your invalidation level. Does it work out? Doesn't it? Just kind of finding out your probabilities and taking the emotions right out of it, right? Because so many people are good analysts, but then something happens in the news and they completely throw all of their analysis skill out the window and just get emotional one day randomly. And then when they look back, they think, oh, I knew better. I know not to do that. That's exactly why we have technical analysis, is so that we can basically sift through the noise, right? Yeah, so far the bulls are making a nice recovery. And actually, even though I didn't take this, I will point it out just because it's a great example. And I think this is such a good strategy and you get such nice entries. There's so many people who would have been FOMO longing into this kind of a move. And then on the way down, they're thinking, oh, I was dumb. You know, we're going to absolutely nuke from here. I was wrong. What actually happened is you just didn't wait for the pullback, if that's the case, right? And if I just pull a Fibonacci, I can tell from right now that this is pretty much going to fill the perfect Stuber Fibonacci box. If I pull from where we bottomed out currently to where we topped out at that point, and look at that, we fill the 786, 886 absolutely perfectly. That's such a strong strategy, and just such a strong way to look at the Fibonacci's when you get those structure breaks or you get those big moves and with those pullbacks. So often we test those levels, and I mean, I see them absolutely everywhere now, whether it's in charts or tall buildings or trees or whatever. Eventually, when you start to see them everywhere, you just start to see them absolutely everywhere. And it just helps keep a nice tight invalidation level, right? Because if you're looking at FOMO long in after we get a nice rally, something like this, and your invalidation level is way down below this support here, or do you wait for the, you know, the market to come all the way down here? You can get in at this level after that pullback right into that fib pocket. And then it's, at least, even if it's wrong, at least it's a nice tight invalidation, right? I actually generally go a little bit further than my 115 fib. That's just kind of there as a reminder to leave some wiggle room. But that's such a tighter invalidation level rather than trying to FOMO into a breakout, right? I mean, breakout trades do work out sometimes. I don't want to say they don't. Breakouts happen all the time, but more often than not, you'll see the trend basically break structure, then pull back, right? So that's more so what I'm looking at. And using Fibonacci's like that really just helps keep the guessing game out of it, right? It keeps it very structured. You have your profits, you have your basically your entries. I like to ladder in heavier on the way down towards my invalidation level just to bring my average entry closer if I am going to get stopped out. Just a little bit of extra risk management there. But you got your entry levels, you got your invalidation levels, and you got your first profit, basically your range profit, right? And my reasoning for that 214 is basically it's just the exact opposite. If I were to pull looking for resistance at that point, because technically if I'm going to be looking at a 786 to find as an entry, then I should be using it to also take profits if I'm trading the opposite direction, right? So at this point, I'd pull a Fibonacci this way and notice that that 214 just front runs the opposing 786 very slightly. So that's basically why I have that as my range target. And obviously, when I take a trade like that, and again, I want to make this clear, I never did take this long, okay? I'm still bearish on the market. I'm willing to take some longs later, but I just don't have FOMO. Like I can catch a random little scalp later. I can catch a swing later. I'm not too worried about finding an entry later. But just as it is right now, and especially in these volatile markets, it's important to pay yourself along the way. And yeah, this was just a very easy, beautiful bounce out of this level and up to the range target. I was still sleeping when this ended up happening. But still important to go through those examples because I think that it's, I don't know, that's one of my favorite strategies personally. So, but again, before you put any money behind any type of trade setup or anything, make sure you do some back testing, right? Make sure you're looking at everything the exact same as, or just that you have a way of looking at things, right? You have your own set of rules because we could have the exact same indicators, same trend lines and absolutely everything. And we would trade the markets completely different. So, I can be trading this market with a bearish bias. Someone else can be trading it with a bullish bias, and we can both be profiting. That's totally fine, right? That's where reacting and execution is way more important than the guessing game of like, what do I think is going to happen? It really doesn't matter as long as you're able to catch some nice, easy moves, basically, right? As it stands right now on the 1 hour, yeah, we're still struggling with that level. Not going to lie. Like as far as a short entry, there is a potential short setup with the nice tight invalidation somewhere just above this wick, basically. But again, I don't know, with how overextended the RSI is and stuff like that, I think it would be a little bit risky. Myself personally. Something that I will look for actually, what is the auto charting tools doing? Setting a series of higher lows at this point. I would like to see us get rejected here and then get one of these signals again, get another lower high signal. Just because right now I would love to pull a Fibonacci from this level, but just the fact that on the very micro time frames, we still have higher highs, higher lows showing with this auto charting tools. I would really like to see us get rejected at this level, set a lower high signal, and then start pulling a Fibonacci from there, basically. Like, let's just say one prints here in the next couple candles because it is a lagging indicator. At that point, I would just basically chasing the price down. If it ends up going to the downside, I'd be just basically following the price and just waiting for it to get back into that 786, 886 zone, basically. I don't know for sure if it's going to happen, right? Trading is one of those things that you have to wait for your ideal setup to come to you. And that's one of the setups that I like to play. So that's kind of what I want to see right now. I will also bring this up. If we got another lower sell signal, I would also consider opening up a short right now. Just because I think that would, again, it would just be a strong sign that there's a lot of weakness showing and right near resistance, right? So that's where all of a sudden we have a lower sell signal. And if we lose this trend here at another lower sell signal, yeah, at that point, it just looks a little bit weak, right? And we have our little fake out zones. So yeah, you'd want to keep your stop loss somewhere above this, in my opinion. But yeah, it would just be a nice tight invalidation, right? Because we are trading right at resistance. So even if we were going to remain bullish and just get some sort of a pullback with a little bit of leverage from these levels, I mean, you could still get a fairly nice move to the downside, right? These ranges are way bigger than they look right now. And another thing I want to mention about that, guys, is consider toning down the leverage or your position sizing, just because of how volatile it is. I think it's extremely easy to get liquidated right now. We're seeing candles jump $1,000 in a single minute, left and right here. So yeah, definitely be careful. These are tough levels. They're definitely tougher conditions to play when it's this volatile, right? But that's where it's so nice having those structured setups. That's why I'm waiting for exact signals to come up before I take an entry on anything, because I have my gut feelings. But I made excellent profits over the last couple of days, and I'd rather not throw those right back into the market. So I want to be a little bit picky and just kind of wait for my signals to show up, some signals with nice tight invalidation levels, and then just start playing my positions again. Can Bitcoin go back to 73,000? Absolutely. And that's one thing, right? Like, it does not matter how bearish I am right now, you guys. Anything can happen and I can be invalidated. That's totally fine. Every trader has theories get invalidated. Every trader loses trades. Every setup loses trades. But this has just been playing out so well so far. I have made a lot of profits by playing this exact theory, basically. Like I said, that 786, 886 after a structure break on a 1 minute's basically my favorite chart pattern to trade. And to see it play out so perfectly on the 4 hourly like this, I mean, it was very obvious to me that this was going to happen. I've actually never felt so comfortable in the markets because I did my little bit of risk management as we were trading at these levels. As we were trading at like 68,000 is where I was selling a little bit of spot. And I don't want to sound too bearish, you guys. Like, I'm not saying the market cycle's necessarily over. I'm not saying Bitcoin's going to zero, nothing like that. All I'm saying is there's absolutely possibilities that we dump significantly lower, because every other time we've got these signals on the weekly chart, it's possible that it's run its course already with a 30% correction, but this exact setup, it would be the smallest reaction out of this setup that I've seen in the last few market cycles, because we had the same setup twice last market cycle, where we lose a weekly candle body structure, we lose a diagonal support, we get that bearish RSI divergence from overextended conditions, right? It's a very specific bearish RSI divergence. 50% there. And then after that little fake out, we end up getting that same signal again with that bearish divergence out of overextended territories, losing that candle body structure, and then just dumping 77%. The market cycle before that, we had it when the previous bull market ended. We also have it a few months before COVID. Yeah, you know what? There's black swan events involved and stuff like that, but there's always reasons in the media, that would suggest why things happened in the charts. There's always going to be bullish and bearish scenarios printed out, ready to go. And then depending what happens in the price, there you're going to see in the media, oh, this is why this happened. But in reality, I mean, I was calling for this move down towards 53,000 for, well, over a couple months now, just because we had this structure break. And I was very clear that we could bounce at this level here because we had a setup that I really liked, right? Even though I was extremely bearish on the trend, I saw the opportunity that, hey, with this overextended divergence, with that pullback to that fib, yeah, you know what? I think that's a reversal for this range, but I don't think it's going to be a reversal as far as a trend, because we were just setting lower lows, lower highs. And that's where I think right now, if we get a bounce, I really just don't see it getting us through all-time highs. But again, the market does not care what I think. If we break these lower highs and we start staircasing higher, then you know what? At that point, I'm going to be bullish like everybody else. I'm totally open. I'm open to adapting in that kind of way. That's what we have to do as traders. I was a total moon boy until early mid-June, and then I started pumping the brakes, and I was like, you know what? There's some very real red flags in the chart, and it's paid to pay attention to those red flags. My account is up instead of down during these volatile times. My spot's getting hammered, don't get me wrong, but my trade account's been loving it. Hi Stu, do you have a hard stop below the 115 or do you wait for the candle close? I have a hard stop. I leave a little bit of wiggle room. I don't have like an exact number, but I always try to go just a little past round numbers. If there's structure nearby, anything like that, I just love to leave a little extra wiggle room there because so often the 115 gets hit basically exactly or just past. So I don't want to get hit by those. But yeah, I'm especially with how the market is right now, with how volatile it is, anything can happen. You know, I could have a stop loss somewhere, and if it just gets absolutely blasted past, there's no chance. There's always a chance that we don't come back to those levels after the candle close. Usually you do, but sometimes you get those gaps. And with how volatile this market is, with I haven't seen Ethereum and Bitcoin moving 10 or 20% in the matter of a few hours or a day in quite some time. I haven't seen that in a long time. So it's just very dangerous to not have a stop loss in place right now. And especially guys, like I am usually trading the 1 minute, right? So that's the whole thing with a 1 minute setup, is that I really like that I can get in with high leverage, very tight invalidation. I usually know within a few minutes if my trade's going to play out or not, because I'm quick to start taking profits, because trading it for what it is. If I'm trading the 1 minute, I'm not looking for the type of move that you're going to get on a 4 hour, right? Remember to play whatever time frame you are playing. But yeah, basically I get into positions looking at them as a scalp. Half my position, basically I close relatively quickly, actually quite quickly. Usually it's that range target, right? When I was talking about, like, let's just say theoretically, this was one of those setups where, hey, we got our bounce here, came back to that 786, 886, absolutely perfect. Yeah, the range target is only right here. In this case, that's actually a decent move in this case, I suppose. What is that? Yeah, that's over $550 there because it is so volatile, but it looks like a very small move. But I'm just playing with it for what it is, right? Since I'm playing a small range on a 1 minute, yeah, I have to remember to start de-risking on a small range on a 1 minute. I'm playing the range first and then hoping to catch a runner with the rest. So again, even though I haven't been playing longs today, but if I would have got into this as a long setup, because that is just a typical one that I would take, yeah, I got to start de-risking quickly. Half my position, at least a quarter. If I was confident in the position, I'd say probably a quarter, but then quite often I'll actually close half my position there just to make sure I pay myself, take risk off the table, again, using high leverage quite often. So just wanting to downsize and then letting half the position run. I never really close my full position all at one time, because there's way too many times that you see people basically say, oh, I wish I didn't close too early. And that's one of those things that I really like to leave part of my position open, half of it if I can, just basically just in case it keeps going, right? Just interested to check something right now. I think we're basically in a Stuber fib. Oh, we actually did just test one. You know what? I'll swing at a little bit of a short here. It's not the ideal one. I want to be clear about this. This is going to be a little bit of a higher risk one. I am only starting with a quarter of my position, and I'm hoping to add into it if we get up here. My reasoning for that is basically I am pulling it off a higher high signal here. So there is still some bullish momentum here. But again, the fact that we're on the 1 hour here and we are struggling with resistance, I think I'm open to the idea of at least trying something. One sec here. Let me just check a couple things here first. Yeah, I'll swing at a little guy. Again, just starting with a quarter of a position. As I ladder into my position on the way up like that, like I was saying, towards my invalidation levels, that's not to be confused with I'm doubling down, tripling down, quadrupling down on my positions. I want to be very clear about that. It's more of having a position in mind and splitting it into 4 chunks, or however many I feel like doing due to risk management. But yeah, it's just a way for me to tighten up my risk, right? I don't, just being that this isn't the exact signal that I like to pull my fib off of, I only have the confidence to go with a small position. And if we get up here and I see, whatever catches my eye as additional reason to go short, then I'll add to my position. But at this time, I just want to keep it small, keep my risk tight. Because I think we're at a level in the market, you guys, where I think we have to be careful. Because I don't know, right now, even though we did reclaim this support here, it's I don't know. I really think that even if we are going to bottom here, there's at least a reason to believe we would end up pulling back and retesting a little bit lower. But let's see what happens. I'd really like to see us lose this trend here and get another lower buy signal. I don't know if it's going to happen. We going to 55.5 or 52 first? Well, we almost got to 55.5 already. So I'm going to say probably there. But we'll see. We'll find out. Yeah, hit that like button. Thank you. Thank you. Much appreciated, guys. For those of you who have been tuning into these streams, I love doing these because honestly, it works so much like a trading journal to me. The more I can talk myself through my own game plan, it just helps me keep a level head. It's easier to stick to my plan. Basically a trading journal, just like everyone should be doing, just to see how are they looking at the market. You know, if things go really, you know, if all of a sudden I start really looking at the market wrong, I can go back to these videos and watch, hey, what was I thinking? Why did that happen? And all that sort of stuff. So I really like doing these and also seeing different opinions. You know, I don't need to be a part of an echo chamber. I don't need people to tell me I'm right. If I love opposing views, but I only like opposing views when they're actually valid, when there's a chart behind it. I don't care what's happening in the global economy, to be completely honest, because I think so many people struggle to read charts and understand how to play charts. And I think they go to the news for that and look for explanations as a little bit of copium. But it's, how do I say it? I guess it's just a lot of people go for that edge and look to the news. So what's happening? How can I use this to my advantage? For one, you're not one of the first people to get the news. So there's always that. The people who actually move markets got it way before you did. And also it's just, you know, if you're misunderstanding reading a chart with a few lines on it, what are the chances that you completely understand 100% how things are going to affect the global economy? That's basically my thinking to it, is why I keep my trading very simple, is because the simpler, the better, because you can so overcomplicate things in your head, especially when you start looking at fundamentals and, you know, looking at all these other numbers, all this other information, data, and just getting chart blindness and totally throwing T8 out the window. So I basically ignore everything. I never follow the news anymore, just straight up charts, because you know what, at the end of the day, if anything's going to happen in the charts, like, you know what, if Trump speaking at that rally would have been bullish for the price of Bitcoin immediately, we would have seen it. All we had to do was go slightly higher. We traded right into perfect resistance here and then absolutely nuked. All we had to do to make that true was break our lower high back here. So had we just gone a little bit higher up here, that would have totally changed my opinion on the market. 100%, I would have felt differently about the market. But since we just got rejected at resistance, it just confirmed my belief that, hey, we're still in a downtrend. How am I getting the candles to look that way? That's my indicators. That's the MDX ALGO indicators. Down below, there is a 10% discount on top of current promotions, if that's something that interests you. Yeah, honestly, I just love the way they look. And then I also have strategies developed around these indicators. But yeah, the one does beautiful colors like this. There's actually a few different ones, and there's actually a ton of customizations. Like, I joke that I just like this indicator because it brings up colors and stuff, but you can add divergences, take profit levels, trend exhaustion, reversal warnings. You can add so many different signals and things, so you can customize so many of these indicators to fit however you like to look at them, right? I just like to keep my charts very clean, so I don't have very much on them, basically. Yeah, we're still trying to hold this buy trend. So that's one thing going for the bulls still. I would feel better about this buy trend if it was a higher buy. The fact that it's a lower buy, I just don't have a ton of confidence in it. But we're going to have to watch. If we get a higher sell signal now, then, then it's time to maybe pump the brakes on my bearish theory and think that, hey, maybe a higher buy signal is going to come into play, just showing that the indicators are showing a shift in trend, right? Things are starting to trend to the upside again. But as it stands right now, being we have a lower buy signal, I would love to see another lower sell signal come into play. But yeah, there's definitely there's reasons why I'm starting to be cautious on my shorts, right? I was going short trigger happy the last couple days. I took so many different short positions on different signals off those lower high auto charting tool signals. I took so many different short positions because, like I said, I am more of a scalper. I had a couple nice running positions, but took many. But now I am just being a little bit more cautious. That's why I have those nice tight stops, like at this case. Yeah, I'm giving a little bit of wiggle room to this, but I'm definitely keeping position sizing and stuff like that on my radar right now. I'm definitely being very cautious, just because I think there's absolutely possibility that we pump higher for a few reasons. But yeah, there's a time when you should be aggressive and a time when you got to be careful, right? And right now, as we're trading kind of at an old support level here, I think it's just important to be cautious at this level. No matter which way you feel about the market right now, Bitcoin's at a very interesting point. I mean, we keep breaking bearish structure, but at this point, it's basically, are we going to get that relief rally, or is it just going to straight break out soon? It's hard to say. But at this point, that's where I like having things like this. This liquidations or the liquidity level indicator just kind of helps me keep a level head that, yeah, you know what? A pullback would be totally normal. If I'm bearish right now and all of a sudden we start trading to the upside, I'm not going to panic, because I know there's liquidity up here that the market maker wants to grab. And I know after breaking structure, it would make perfect sense to end up retesting, trading, doing a retest up back into resistance, right? Yeah, hopefully you guys are finding these streams useful, because I know a lot of people are in extreme panic mode. I feel so calm about the markets right now. It's a very nice position to be in, because it gets very easy to get into a bad downward spiral. Like if I lose this short that I just took, I don't care. The shorts I've taken in the last couple days have so many times outperformed the one loss that I might take if this structure changes. And the way I'm looking at it is basically the trend is your friend until the end, right? So as it stands right now, we still haven't got an hourly close above this lower high. We still have this resistance right up above us here. So you know what? If I get invalidated, that's fine. Lose positions all the time. That's totally fine. What matters is how you deal with losses, right? I'm not going to be adding into my position aggressively to try and fix it, to try and bring my average entry down. Only, in my range that's still a part of my plan, yeah, I'll add to my position. That's totally fine. But as soon as we start closing candle bodies above this level, for one, I would cancel all my other orders, even if we haven't been invalidated yet with the stop loss. I would just think that, hey, that's a sign that maybe there is some bullish strength here. I'm going to limit my risk even tighter. So it's all about reacting to how the market structure forms, right? I have been calling for this for a long ass time. Yeah, Mystical, I've seen you in all my videos commenting and everything, and you've been ready for this. That's when you're ready for this and you can just look at the market structure for what it is, just like I said, basic structure levels, right? Let me just reload it. That's always easier than refiguring what I've all changed. If you just look at it for what it is, just basic market structure. I mean, there was nothing uncalled for in this price action right here ever since breaking this level here. this has been all very predictable. That's just a basic structure break, pull back to the 786, 886. Structure break, pull back to 786, 886. Structure break. We're going to have to see if it can even bounce again after something like that. You know, after it breaks structure so many times, how long until that starts aggressively curling to the downside and we get some sort of an inverse parabola? I know nobody wants to hear that. And I'm not saying that it's probable. You know, it's absolutely possible we've bottomed. Anything is possible. And that's the thing to understand, is anything is possible. So, you know, there's some lower price targets that I'm not even going to talk about in this stream. I'm going to try and avoid it for once. But, you know, there's some potential very deep targets. And it's not, again, not saying it's going to happen, but anything can happen because the market doesn't care whether I think it'll happen or not. It's absolutely possible. Still holding support on this buy trend here. Are the liquidation levels included in the indicator? Yeah, that's the thing, guys. Here, once again, I am just going to, actually here, I'll just reload. I will remove all the drawings and go straight indicators. Like these are the indicators I typically use. Trend dynamic, that's the one that just makes it beautiful colors. And obviously all those other things as well that you can add, but that's just what I use it for. Trend master, and I actually have my own settings on this now as a preset indicator settings that MDX Crypto gave me. So even if you end up using these indicators, you can just set them to my settings automatically. So it's a bit of a scalping settings. Again, I don't necessarily take every signal, right? I'm not going to take every sell. I'm not taking every buy. I'm more so using these as confluence. Which way are they trending and stuff like that. So when I'm looking for those structure breaks and Fibonacci pullbacks, well, what are the indicators doing? Are they trending to the downside? Should I be looking for bearish pullbacks and all that sort of thing, right? So very cool. Auto charting tools, that is, again, one that has a whole bunch of features, automatic fib pulls, automatic trend lines, so many different things. I mostly just use it for swing points. And that's basically looking for these higher highs, higher lows, lower highs, all that sort of thing. And yeah, that's what I've been showing on a lot of these streams lately. Pulling Fibonacci's from these levels can be so powerful. The one I pulled right now, again, it's technically going against the trend because I pulled it from a higher high. So there's an added level of risk there for sure. But yeah, those can be a very strong second opinion when helping you choose, you know, where should I be pulling fibs from when you're looking for structure breaks and all that sort of thing. So very helpful. Love that indicator. And then, yeah, liquidations. That's the other one I use, just kind of as a reminder, like, hey, where does this market maker want to grab liquidity from? So although it might not be an immediate thing, it's just kind of something that helps to stay on my radar as, yeah, does it make sense that we would trade all the way up here? Even if we are going to carry on to the downside? Yeah, absolutely. It makes sense because the market maker would want that liquidity. Another way you can use that indicator actually is you can change it from levels to bands, and it'll show more like a moving average type thing. So you can see that just on average, there's a lot of liquidity up at this level. And actually, that's kind of funny because where it stands right now, watch, if I pull a Fibonacci from where we topped out here so far on this trend, notice that high leverage liquidity level lines up right in the middle of the 786, 886 fib pocket. So again, just another little added bit of confluence that, hey, you know, it's very possible we get some sort of a bounce, even if it's just to grab that market liquidity and carry on to the downside. So very cool features with some of these. And there's a handful of, like, this is all of them, these invite only tools. These are all the indicators that come with that bundle. Other people have made videos on how they work and that sort of thing in the group. I personally just don't use a ton of them because I just have a few basic things that I look at basically, but so many cool features there. And again, if that is something that interests you, there is that 10% additional discount with the link down below in the description. That's on top of current promotions with the MDX ALGO. So check that out if that's something that interests you. Love these indicators. Love the way they make my charts look. And the functionality. I just love absolutely everything about them. So yeah, so far we are still struggling a little bit here. Yeah, that 1 hour resistance, hey, just like where we ended up finding that resistance there. And hopefully that makes sense why I picked this yellow line here. Again, for those of you who weren't here earlier, we had our low, lower low, lower high. So I'm just treating the top of this. That's the highest point between our low and lower low on this immediate downtrend here. That's basically first steps for me to show any signs of bullishness would be breaking that level. In my opinion, that would be a significant break of structure. As it stands right now, we're still getting rejected there. It's nice that we're tapping away at it from a bullish perspective, but until we actually get a 1 hour candle body close above this level, at that point, that's where I'll be more willing to consider the possibilities that, hey, we're going to pull back to some sort of a Fibonacci. And if that case, and there's a chance that doesn't happen, right? There's always the chance that, hey, we just break out and we just go straight up from there. Yeah, you know what? There's absolutely that possibility. Just so often when you end up breaking a structure level with candle body close, you end up getting that retrace and just getting a much nicer entry in that sort of a situation if the trend is going to continue, right? So that's kind of my reasoning for that there. Oh, nice to see we are starting to lose that level. What did my average entry end up being? I'm actually, since we are reacting here a little bit, I am going to cancel my other orders. Oh, no, never mind. I thought I had some up higher, but I guess I was waiting to see if I got a swing fail up there. But 54,643 is where I did enter before. I should put that up here so we can keep tabs on it. Basically right at that 1 hour level. Yeah, we'll see what happens from here. See, we're starting to lose that buy trend here. By the time we set a sell signal here, I'm very curious to see if it'll be a lower one. In which case, that would just give me a little additional confidence with my position. What is the naked chart doing here? So as far as the very micro time frame goes, I mean, if I wanted to update lower time frame, lower high on this little micro trend here, I could look at something as that. If the price ends up getting above here, then I think we test a little bit higher, basically. Kind of looking at the same thing, right? Low, lower, low, highest point between the two. That's our lower high. And yes, that is micro analyzing. That is looking at the immediate trend of the 1 minute. So take it for what it is. We're not looking at necessarily a home run trade out of this, but see what happens. I would really like to see market structure, like as this position goes, if we can set another lower low, something like this, then we have a new lower high. And then at that point, if I can update my stop loss into a profit based on how structure ends up forming like that, that's the ideal position for me to be in, because then I have no risk on the table at that point. But we're going to have to see what happens. As it stands right now, this is kind of the lower high that I'm interested in. Great analysis. Come back soon every day. Absolutely. Thank you. Yeah, well, I'm glad that you guys are enjoying this, because I think a lot of people, even people with very large followings, especially people with large followings who don't even post charts and just say we're going up because they just think we should. That's not how trading works. You know, we feel that the market owes us something. The market doesn't owe us shit. The market will do what it wants. You know, at the end of the day, the chart will do what the chart does. If you can't react to that, if you can't change your bias on the fly, that's a very dangerous thing to be trying to trade, because as an actual trader, you can't have too much of a bias. You always have to have those invalidation levels. You can't be married to an idea. I love trading the downside. I think this has been so much fun. Bearish price action yesterday was a perfect example, you guys. Bearish price action moves so fast, and you can make money so fast. It's very exciting, because generally speaking, bearish price action happens about 3 times faster than bullish. You know, I can't wait for the actual bear market if that is around the corner. Again, I'm not saying the bear market is here. I'm just saying that, like, I personally can't wait. I think it's going to be fun with these very powerful indicators and strategies I've built around them. I can't wait. I don't care which way the market goes. I just care that it's volatile. Everyone else you follow is a moon boy. Yeah, me too. There's very few traders who I actually consider their opinions quite strongly. A couple of them do streams on the same channel, and then there's also a couple other ones. Other than that, like, there's probably less than 5 people that I take seriously, and that's just, you know, I don't like getting blinded by other people's analysis. I don't want people. I want people to challenge my opinions. Like I said, if there's actually something that I believe in what they're saying, but people who just argue for the sake of, no, I just feel like, you know, this market cycle's not over yet because we haven't hit 100,000. That's a dangerous way to think, because again, reacting over predicting any day. And, you know, the fact that we had this signal on the weekly, I ignored it last cycle. You know what? I learned my lesson. I got my wrist slapped. Back at this level, I remember it very clearly. I lost a lot of money when this happened, and I saw this pattern and I ignored it. And that is one of my favorite patterns to short. But I thought on the weekly, no, it can't happen. And that's exactly what people were telling me recently, that no, that's not going to happen. Well, I remember being in your shoes last market cycle, thinking the exact same thing and getting absolutely shit on in this price action. And it caught me off guard. And that's one thing that really stuck with me, and one thing that really helped me keep my bearish bias through this. Because again, it's not just that we had the structure break, it's that we had the structure break, the loss of diagonal structure, the RSI extended divergence. I just had so many things lining up there that it just seemed, it felt too obvious almost. And in hindsight, even if this nuke's way lower, it's going to look so obvious in hindsight. But we'll see. Again, the market doesn't care what I think. I would really like to see this position get down to here. If we do, I'm going to be closing out at least half my position. Because same thing, you guys, that's the range I pulled, right? If I pulled my Fibonacci from this level to this level, that's my range. I play the range first, and I basically hope for a breakout after that. If that range plays out and we get the move down here, I'm closing, like I said, half my position. And after that, I'd be looking for the swing target, basically, right? Looking for the full Fibonacci pull. In that case, I'd be looking for, you know, next target way down here. And even then, I would not close my entire position, because I think, you know, the fact that we actually got rejected at lower high structure here on the 1 hour, you know, again, we could blast through it at any time, but we haven't yet. We have not broke that structure yet. And, you know, I'm not so sure support will hold again just because we got rejected here. Again, if we had closed these candle bodies above this yellow line, or even this one here above this yellow line, I would feel so differently approaching these levels. That's where market structure can look very similar, but it's actually very, very different. And that's something that a lot of people don't understand with reading charts. Oh, did I accidentally deleted my entry. What was that? Let me just check here. 54, 643. Oh, there we go. Wait, that's not the one. That must be an old one. $54, 643. And then the Fibonacci I was watching, the new one, was pulled like so. Yeah, so guys, like when I talk about this strategy and when I show all these examples, just notice that, even if this doesn't play out in my favor, let's just say I get greedy and I don't take profits quick enough or whatever, just notice how no matter how you want to look at it, there was an obvious level of um, just interest, right? As we get that structure break, we lose these lows, something like this. We come back and we eventually test that 786, 886. And that's why I've been so vocal about them and why I always teach how I look at these levels. Because, yeah, like I said, they're not going to play out every time, but so often you get that immediate reaction at that level. If you're laddering into a position, if you're ready for it at the time, get your average entry somewhere in the middle, or even what I like to do, sometimes it will go higher, right? Like maybe we do get a double top or even a little higher, something like that, and then continuing to the downside. You're getting your average entry actually somewhere above the 886, because laddering in that kind of a case, I'm usually like a quarter, a half, or something like that, just to pull that average entry up. So they can be very powerful positions. Like I said, just so often, and look how accurate it is, right? Like so often it goes directly to the 886, like pinpoint accurate. It's actually pretty crazy how often that happens. If there is a higher sell signal, would I de-risk? What would that mean to me? Yeah, if I was able to, like if I was already sitting in a profit or something like that, and we end up getting a higher sell signal, I would consider that just a warning, right? It's not saying necessarily like, again, not necessarily taking the short because the sell signal is trending to the upside. Also, not necessarily saying to long or buy because, again, it's a sell signal. But just showing that there's a potential shift in direction. Something in the indicators are starting to shift directions. And that's just a bit of a warning to me. So if I'm at like break even or a small profit even, I will consider downsizing my position at that point or totally getting out. It really depends how I feel in the market at that time. But yeah, definitely a way I like to use the indicators for risk management. Kind of doing the same. Thanks for the 886 fib. Oh, love to hear it. Glad to have you here. Thanks for joining me. That's a little gift for you. you you called it, didn't want to hear it, suffering for it now. Damn, I will listen to you from now on. And that's exactly it, you guys. I had so many people over the last couple of weeks telling me just straight up, you're wrong for no reason. And a lot of people, just quietly disagreed with me. And it's totally fine. And it's totally fine to disagree with people in general. And I don't want to say that like, hey, anyone who was bullish at these levels was an idiot. No, absolutely not. I totally see reasons why people would be bullish on the macro trend and that sort of thing. The only thing is, I really have a hard time seeing people with large followings say that there's absolutely zero red flags here and that we're bullish no matter what and we're going so much higher. There's just like, I agree it could happen, but the thing is, you have to be able to look at both sides of things, right? Like I said at the beginning of the stream, just understand like what happens if I'm wrong. Just always having a backup plan, right? And yeah, I'm just like everybody else, right? My spot bags, yeah, they got hammered. My altcoins, my meme coins, they got just absolutely hammered. But again, my trading account worked as a great hedge. I would say it's actually probably outperforming my holding. And yeah, so it was just more so the way I was looking at the bearish or the market so bearishly. It's not that I'm bearish on crypto as a whole. I'm very pro crypto. I love crypto. I work with it every day. I'm moving it every day. I'm trading it every day. I love it. The thing is, I'm able to be bullish enough that I can look at it and say, hey, if it goes down to those levels, I'm actually not that worried. I don't care. I'm not one of those people that needs crypto to go straight to the moon for me to be happy. As long as it's volatile, I'm happy. I'm happier if it's swinging both ways, honestly. It's usually easier to see when those ranges are breaking and stuff. It's easier to catch those positions. So I really don't care which way it goes. I am not married to an idea at all. And that's a very hard mindset for a lot of people to get into. A lot of people just want things to go straight up, but unfortunately, big corrections are totally normal. And people who think that, even at this point, before it was only minus 25% before yesterday. But now this move has actually, this signal did call a 30% move to the downside already. And, that's a very significant move in crypto. But a lot of people think that, hey, 25% there, oh, that was max pain. That was the final shakeout. Anybody who's been in crypto for more than one cycle knows that 25% as far as a crypto drop is not maximum pain. That is a little bitch move when it comes to crypto. Crypto is one of the most volatile assets. And although it's way less volatile than it used to be, I remember when I first started trading Bitcoin, it was swinging 30 or 40% every day. Now that seems like a huge amount, but just to go how it's changing and how everybody's celebrating larger players getting involved in that sort of thing. But really what's happening is they're taming the market. We're not seeing those exponential, the bull markets are still nice. We got like a 3x from the previous market high to last market cycle's high. And then this one, we barely broke last market cycle's high. So yeah, absolutely. I see, I agree. It would be very weird if this is where our market cycle topped. I still think it would be very, very strange. But again, the market does not care how I feel about it. And with bigger players getting in the space, everyone thinks that, oh, bigger players are going to FOMO in at all-time highs. That's not why we call them smart money, you guys. I understand that it sounded all good and all fun and games as Trump was talking about Bitcoin going to the moon and Bitcoin being bullish up at these levels. But even if there's something very bullish happening, like the government starting to use it as a treasury or whatever the theories are there, like I said, I don't follow the news all that close. But whatever was being said about that, you really think they're going to FOMO in at all-time highs? That's not how smart money got rich. They don't do that. They don't pump our bags for us late like that. They will do whatever they need to because they have more money to sit on. They have more patience, more money, and more market experience, and they can wait out these crashes and, wait for us to panic way more than we can wait it out, right? And this is a perfect example. Everyone's trying to FOMO long into the market still 71% of the market is long, even after this devastating blow. Like everyone's just so scared to miss that all-time high move. But really, and you see influencers saying like, everybody stop selling, blah blah blah. No, what we need people to stop FOMO longing. All that retail is doing by having FOMO is just creating liquidity for the market maker to push this price even lower. So I think there's a pretty big misunderstanding there, and it's unfortunate. A lot of people don't understand that side of things. Is the 214 fib the 786 if you draw it reverse? Yeah, exactly. It's basically, it front runs it slightly usually. It totally depends because usually, if I'm pulling the new swing, it's probably a little bit smaller. If it got rejected at the previous 786, 886, it's going to be a slightly smaller range when pulled the opposite. So that 214 will actually slightly front run it, which is perfect because, right, if I'm looking to take profits on a position, it's like, hey, if I was willing to take a position at that 786, maybe I should be willing to pay myself at that same level. Because if it's a sell level, it's a sell level. If it's a buy level, it's a buy level. So it depends what type of position you're in or looking to get into, right? Do I have a tutorial for how I trade using the indicators on my channel? Not exactly, I guess. Basically how I look at them on these streams. There is a few strategies that I've shared in another community. I think on Twitter and stuff, I have shared random things. But even the last few streams I've done here, I've shown how I really like to do it. Like right now, I would love to show you one if we got one of these lower high sell signals. Like at that point, that's the type of signal that I would like to look for a short, for example. This is all very theoretical, and even if it works out, it was obviously hindsight. But yeah, looking for a fib pull, something like that, right? But then the thing is, after that, we got a new lower high signal here, and if we pulled that one actually got invalidated, right? Because not every signal is going to work. All of a sudden, you're going to eventually end up breaking a trend. So sometimes that happens. But that's kind of what I like to look for in a position. Looking for either higher lows, if looking for a bullish one, to pull a fib from kind of bottom to top kind of a thing. or looking for the bearish side of things, I'd be looking for those lower highs just because they're very powerful swing points quite often, and they are lagging, right? Like they don't print right as that candle prints, but that gives you time to basically wait and all of a sudden there's a signal there. Let's just pretend it was a lower high instead of a higher high. At that point, I'd be waiting for, oh, well, let's just chase this with the Fibonacci and eventually hope that, we get something, get something come back up to this level. And then boom, there's my finally getting back into the 786, 886. That's where I like to take my entry, and then looking for that range move and then hoping for a bigger move, obviously. But yeah, in this case, this is a higher high, so not ideal for looking for a bearish setup. But being I am kind of bearish on the market right now, I am, I am looking for bearish scenarios. So I do want to see a lower high come into play that I can pull a fib off of. But that's just one strategy I use. That's kind of a mixture of the auto charting tools and my Fibonacci strategies. Just kind of a combination of the two, right? Oh, geez, I did that thing again where I switched everything up here. We do have a lower sell signal again. I'm going to have to see how the market reacts to that. I keep thinking we're going to break out of this this 1 hour resistance, but I mean, resistance is resistance until it's broken. All right, what was that damn number once again? Was it 643? Let me just check my position. 643. Basically at break even right now. Very small profit there so far. Let me get that resistance mapped out again. Sorry, I keep reloading things and forgetting to save things. 1 hour resistance to watch. Now we're still seeing strength here, though. It's trying to push through resistance. Again, if we end up getting a close above this this 1 hour resistance here, I wouldn't be surprised if quite shortly or fairly soon we end up seeing a higher buy signal. In that case, I would consider closing my position, even if it's in a bit of a loss, just because I'd lose a little bit of confidence in it. I would definitely be downsizing if nothing else. Again, just using them as a little bit of risk management. Yeah, we're starting to flip pink again already. It's looking like there's some strength there. I don't have a ton of confidence in this position anymore, but we'll see. That's why we have invalidation levels, right, guys? Again, just basically looking at this 1 hour trend line or this 1 hour horizontal resistance line. If we start breaking these resistance levels, then I get stopped out. That's fine. That's a part of trading. If anyone tells you they never lose trades, they're lying to your face. Yeah, you can see, like, again, it's kind of one of those things, just like the fib, right? You can just tell there's an obvious reaction at this level. Even if we do blast through it, there is some interest there, obviously. UTP on top of this bounce, waiting for retest of the lows. Yeah, that's absolutely a thing, right? Like I think, oh, there's that higher buy signal. You know what? Even though I'm in a very small loss right now, I'm going to close half my position. Just kind of using the indicators as a bit of risk management, because I absolutely see possibilities that we end up taking out this 1 hour support. I just want to downsize my risk because, like I said, the market's in a very tricky situation right now. And I'd rather just protect myself more than anything right now. Don't want to give back the last couple days of profits, right? But yeah, I don't know. I personally think even if we end up breaking this 1 hour resistance here, Again, I'd rather see the 1 hour candle close, and obviously there's a lot of time. So that's the thing. Like this 1 hour candle, even if we get a close above, it might be like so far gone that, you know what, at that point, it's kind of scary to take a breakout position, which I'm not a big fan of breakouts anyways. But more so looking at if we end up closing candle body above this, I still think we would see some sort of a pullback after that. But again, that's one of those situations where I would actually be quite bullish at these levels then, especially if the RSI, we get some sort of a crazy divergence like I was talking about before. And it does look like that's very possible, right? Because it's from overextended down here. And if we pulled back to something like that, basically, just to have our price action line up with our Fibonacci's right as our RSI kind of lines up with that bullish divergence, right? That would be my ideal situation where I would actually be quite bullish and think we're going to see a pretty aggressive bounce. That's like kind of my ideal reversal long setup kind of a thing. Again, not saying it has to work out, but that's exactly what the previous bottom looked like. And that's just a very basic structure, RSI divergence, Fibonacci pullback, everything kind of lines up for me. And that would be totally normal, right? And a lot of people would get very bearish as we trade back down to these levels. But if we actually get those bodies closing above here before that pullback, like I said, that's very different structure. And I would definitely be watching these levels. Like if we get a close above this level, I will be setting alerts down here because I want to take a look at the price action when we get down there. I want to look for, let's say on the 1 minute, looking for a break of a lower high on a 1 minute trend, for example, just to confirm that, hey, I'm looking at this on a 1 hour, but I want to dial in my entry to look for some sort of a confirmation on a shorter time frame at that point. Because like I said, I'm just not overly bullish, so I don't have FOMO in getting into a long position right now. I know a lot of people would think that, haha, you never got into a long position down here, whatever. I really don't care. I actually couldn't care less because the shorts were so juicy the last couple days. Zero emotion attached to this right now. The candle colors, I went over this earlier. This is the trend dynamic indicator. This is with the MDX ALGO Trendmaster indicators that I have here. There's a whole pile of them. I only use a few of them. There's a 10% discount down below using my link on top of current promotions if that's something that interests you. I absolutely love these. I can't look at my charts enough, honestly. I just think they're absolute fire. I think these updates were done to the colors like 1.5 years ago or something, and I have just been hooked on all these indicators ever since. They're just beautiful. Obviously, there's a lot more to them than the colors, which if you missed the start of this video too, or even go back to my previous video or rewatch this video, I kind of go over a bunch of the indicators a little bit. But yeah, I just have the few that I really like to use. And yeah, one of them just happens to make my chart absolutely beautiful. What would my buy level zone be on Solana if we go sub 30K in BTC? I got to say right now, I really like that question. And my reasoning for that is because you're willing to consider the possibility that Bitcoin would ever drop below $30,000. Not a lot of people are willing to even consider that. And a lot of people cannot stomach that. And although I don't think it's probable, it's absolutely possible. My reasoning for that is, if this are a typical Stuber fib setup, you know what? This played out, right? That's one thing to consider. We got that test. We came back down. We tested the target level. We did it again over here. So the range play actually happened already. My concern is that when I trade this on a 1 minute or a 5 minute, most of the time it ends up, if it breaks through the range like this, so often it ends up getting a full on swing reversal. And if, again, I consider market structure way more important than any numbers or anything like that. So I can very easily look at this weekly chart and pretend these numbers aren't on the side, because at the end of the day, the numbers don't decide the structure, the levels do. And if I was treating this like any of my favorite short setups, especially the fact that it has that crazy overextended bearish divergence on the RSI, I'm looking at it as a potential reversal pattern. And again, I don't know if the market cycle is necessarily over, but in my opinion, it's going to be a very big move to the downside. And whether, I think if it happens, it's going to be very quickly cleared up. I think it'll be bought up very quickly. And again, I have to say every time, like, this is a bit of a trigger warning because a lot of people do not want to consider this. So thank you for that. That was actually very refreshing. If this range play has already happened, if we get a full swing play, we're looking at a much lower Fibonacci pocket because that's just basic market structure. Again, this does not have to happen. I think it would take some sort of a black swan event, but we have no idea what's about to happen. And we're just going to have to see what does happen, because even the fact that on the way up to the upside, a lot of this price action never had a lot of trading, right? The fact that, like, we went straight up right here, there's not a lot of constructive structure here. Just like right here, we went straight up. So there's a lot of emptiness in this whole range. And on top of that, it lines up with my Fibonacci's. Look, the bottom of that range of nothingness basically lines up perfect with the 786. So to say that it's not possible, I remember feeling that it wasn't possible for that to happen this last market cycle. And I mean, look what happened. Nobody thought it was possible that we filled that fib gap back here either, but we nuked 68%. And I remember hearing, bigger players are involved in the space. That won't happen this cycle. This cycle's different. Every cycle is different. Every cycle does have significantly more money involved. Every cycle takes significantly more money to make the same things happen. And that's a misconception that a lot of people have as well, is they think, these bigger players are in the space. Yeah, but there's more Bitcoin in circulation. Even though there's the halving and there's less being mined, there is still some being mined. There is still more in circulation. And not only that, but now there's so much leverage and paper trading and futures and everything. Do you really think that it doesn't really feel like there's only 21 million Bitcoin anymore? There's so much money and so many moving parts now with the bigger players being involved that anything is possible, right? And the fact that we have these big gaps of not much trading action, and we have this bearish, reversal warning here. And we have this, if this was a 5-minute or a 1-minute chart, I would totally be targeting these next. After my range target was hit, I would be targeting my swing target. So that's my main concern with Bitcoin right now. And honestly, it feels weird saying or even mapping out because it looks ridiculous and it looks like it can't happen. But again, I felt that way last cycle. And you know what? It sure as shit happened. So something to consider there. Basically, on that note, anything can happen. Be ready for anything. I mean, if we end up starting to drop these levels, and I will get to your Solana in a minute, I promise. But obviously, we do have some trading back here, this little bit of a range. But if we just blast through that, I will just be setting buy orders. I will not be waiting for a reaction because I think it'll be short-lived if we get here. But as soon as we start dropping these levels, we drop below 40K on Bitcoin, I am laddering in limit orders throughout this box, because I think at that point, it just makes sense that we would absolutely come down towards those levels. And I would start laddering in orders because I think it would be short-lived. And I think at that point, I would actually be extremely bullish on the market, because that's one of those things where I think it would get bought up quickly and there would be a crazy momentum shift. Like, I think that there would be so much FOMO trying to chase the price to the upside. And I think we'd actually have that final flush out there. It would take some sort of a capitulation event to get those prices. And at that point, if there is actually nobody left to sell, unlike right now, 70% of the market's long, there's a lot of people that can still sell. There's a lot of selling pressure that is untapped. Even the RSI, we're basically right in the halfway point. We're at around 45 for the RSI. Yeah, maybe we're finding support at 50-ish, but the thing to consider is we're by no means oversold on the longer time frames. Yeah, the shorter time frames we are, but the longer time frames, there's lots of room to the downside. The only thing is, for something like that to play out, like and again, guys, this is a massive if we were to come back to these levels, I don't think it would be for like 3 to 6 months. I'm not saying that's going to be in the next couple of weeks, and I'm not even saying it's going to happen, but there's just something to keep on the radar, right? Yeah, so with that being said, I will take a look at Solana. Yeah, I haven't looked at Solana in a while. So you'd probably, well, I'd have to look at about a weekly chart. Basically, I would be looking to do the same. The only way I really like to analyze something so far away like that, if Bitcoin does drop 30K, again, guys, very, very big if there. That's where I would basically do the same with Solana and start pulling Fibonacci's and think that, if Bitcoin does nuke down to 30 or 28 or 22K or whatever, in that case, I mean, if Bitcoin's hitting the 786, 886, I don't see why Solana wouldn't as well. And that's all the way down towards $50. So, I mean, yes, it doesn't feel realistic right now, but it's possible. That's the thing with crypto. People very quickly forget how painful bear markets are, or even bearish swings, bearish trends. Doesn't have to be the cycle, but just a bearish trend can be very painful. That's just my opinion. Like, obviously, none of this has to happen. And obviously, none of this is financial advice. Do your own research, form your own opinions. But again, do some back testing. That's the best thing you can do, is go back, find out what works for you. But yeah, the way I'm looking at it, the big if Bitcoin absolutely nukes and crashes to oblivion, then I think altcoins are going to be in for a rude awakening as well, because that's just generally what happens, right? Happy still in the short. Nice, nice. Yeah, I still have half my short running here. Wish I still had some of my shorts running from yesterday, but you know what? I took good profits on them, so that's totally fine as well. But honestly, it is pretty hard finding new positions when the market's this volatile, when the market's moving $1,000 per candle at times. Yeah, obviously with that much volatility, entering with leverage can become quite dangerous quite quickly, right? So I'm starting with very small position sizes right now. If anything, I would like to see a trend form to the downside and see more lower high signals, in a way that, hey, I'm able to add to my position and tighten up my stop loss as I go. If it turns into a bit of a trend, that's a very good position to be in, because that way I feel like, hey, I can slowly add in, but with proper signals, right? Not just because, oh, we're dumping, I'm going to add to my position. No, still waiting for that signal, waiting for those pullbacks, and only adding to my position if it makes sense to update my stop loss into a profit at that point, right? What do I think about Litecoin? Didn't really have a bull run. Do I expect it would drop as hard if Bitcoin slipped to 30s, or hold better? I feel like it would get absolutely hammered. I have not looked at Litecoin in years. Oh boy. Yeah, that's a rough chart. Um, One thing for a little bit of hopium here would be where we're trading right now. I feel like we're already at that fib pocket. Yep, filled it perfectly. Oh man, I want to go to an older chart. I know there's older charts, a Bitstamp. Yeah, there we go. That's the old faithful. Litecoin. Yeah, that's interesting. That just doesn't look great to me, in my opinion. I mean, the one thing going for it is obviously we're near the bottom of the channel, but I can't say I'm bullish on this chart. The only bit of hopium bullishness that I can get behind, and this is, well, let's just say that here, let's again, very micro analyzing this little trend, but we had this low, lower low, lower high. We obviously broke that structure, and just looking at where we are currently trading is, yeah, just like I just pointed out. And actually, what I don't like about that is we already had a higher low signal here on the auto charting tools. And yeah, we're already struggling to hold that level. Never hit my invalidation level, to be fair, but there's just, ooh, that's rough. I honestly, I don't even know what to tell you. If Bitcoin drops to 30K, I don't know what would happen to Litecoin. There is the odd time where random coins like this do hedge against Bitcoin for whatever reason. I know XRP has done it several times. I have seen it doing this market cycle. I've seen it doing it last market cycle. I think even the one before, whereas sometimes XRP would move the exact opposite of Bitcoin. And which is kind of odd, right? Because usually altcoins go the same direction, but more aggressively. But in that case, quite often they will also go the exact opposite. And maybe Litecoin does that, but I haven't watched it enough to notice that. I haven't bought Litecoin since actually, here, you can take a laugh at me. Where was it? Pretty sure I bought Litecoin right about here. Right around the first day of my trading career. That's kind of where I got into crypto, was the very peak of that market cycle, the end of 2017. I was one of those people who FOMO'd the top, but also I understood I was probably going to do it wrong. So I started trading very small and stuff like that, and just learned how to do coin collecting, just to keep that emotional side of money out of it, and just kind of learn to trade that way, just accumulating coins on the dips for free, kind of a thing. So even though, yeah, you know what, I totally got in at the wrong time, I understand what people are going through, right? It's not like I got lucky and bought into Bitcoin super early or anything like that. I just taught myself how to trade through a bear market, basically. And that's why I don't mind a bear market. You know, the fact that we have this bearish price action right now, it just kind of brought me back to the good old days, where I was just basically trading the downside because I was trying to sell things and then buy them back cheaper. And that's kind of what shorting is, right? But yeah, to answer your question, I have no idea what to expect for Litecoin if Bitcoin is to nuke. And again, those are all big what ifs, right? A lot of what ifs. Something like that looks scary. Let's just see what's the absolute bottom. Ooh, yeah, that looks scary to me. But again, support is support until it's broken. Where's our all-time low? How much lower can we go? Holy, that's another 60% to the downside if we test the lows. Yeah, that's a scary chart. I don't know. I don't see a ton of bullish price action behind that. There's not a lot of momentum there. Maybe it's a late bloomer this market cycle or something, but I'm just going to have to play it for how it is. Basically, I personally think that if we would end up breaking out of this range, like all of a sudden we break that lower high structure, I think in that case, it gets very bullish. I think at that point, it makes sense that we start trending to the upside for a while. But until that happens, it's in a bit of a scary place, in my opinion. Bitcoin's still climbing a little bit. Oh yeah, not a problem. Like any requests, guys, by all means, feel free. I'm probably going to wrap up fairly soon here. I honestly don't know if this trade's going to go in my favor or not. It's looking like we're really trying to break out of that 1 hour structure. And if, like I said, if that happens, that's totally fine. We close this candle body in 35 minutes here above this level. I would love to see a pullback to end up getting into a long position on. So that's something to kind of look for in the future. But yeah, as it stands right now, I just don't have FOMO is all. I'm just not a moon boy, and I haven't been for a couple months at this point. I've just been having fun as a bear lately. And that's weird for me. I want to be clear about this too, you guys, is a lot of people probably think that I'm a perma bear. Not like that at all. And those of you guys in the MDX ALGO community, you know that I ended up taking the same sort of criticism when we were trading at these levels down here. When we were trading at this level and we started breaking out through this level, a lot of people remember that. I think it was when was it? The start of 2023. I think it was even the end. I think even at these levels already, after we got that FTX collapse, I was kind of thinking like, everyone's pulling their crypto off exchanges. everybody's getting their final shakeout kind of a thing. I was like, I don't really necessarily understand it because it seems really bearish and scary right now, but maybe there's a weird kind of um, liquidity crisis that'll happen, or just like um, basically a liquidity squeeze. Like everybody was so scared of exchanges at that point that everyone was pulling them off onto the ledgers. So if everyone's pulling their crypto off exchanges, it's pretty hard to be panic selling at that point, right? Everyone was panic removing it from the market. So at that point, we ran out of basically liquidity and we started trading to the upside. And I remember saying very clearly, I didn't know how it was going to happen, but the chart looked like, we were starting to get these bullish divergences and stuff like that. I was starting to get bullish on it, and I was targeting 48K. We ended up getting it the day of the ETF approval, got a minor rejection there, and actually went a little higher, which I was not expecting. I thought we were going to get a much bigger reaction there, and it never happened, and that's totally fine. But basically, back here, I've been bullish for a good year and a half. I was a total moon boy, and I know people were sick of hearing it back then, and I took some criticism about that back here. And now it's the exact same thing on the opposite. I'm feeling pretty confident about my bearish stance lately, and I'm taking criticism. Even some of the exact same people have been criticizing. I've noticed a couple of the exact same names, and I find that pretty funny, actually. And again, I really don't care. I don't care what anyone else's opinion is on the market. Because at the end of the day, no matter how good of a trader I find somebody else, I will never trade blindly off someone else's signals. I will only if I agree with it. No matter how much I respect somebody else's opinion, I always come to my own conclusions. I only have myself to blame if I lose a trade. Yeah, we're still just kind of struggling a little bit. Hey, both ways. The fact that we got that higher buy, I really do. I have a feeling that this short will get stopped out, just because things are still trying to trend to the upside, and we are hugging that 1 hour resistance so much. But again, we'll see. This trend has been very nice and very kind to me. So if it has to take a sacrifice here, then so be it. Always play the trend until it breaks. If it breaks here, then I can start short-term trading the long side of things. If you ever find yourself getting upset, that's one thing I should mention. If you're ever upset about a trade that you take and you lose, you're trading with too much money. You're trading with too much leverage. Use a smaller percentage of your account. You should be able to, lose a couple trades and not lose sleep over it. And at the same time, if you start losing trades, it's totally fine to take a step back. Sometimes you need a reset. Maybe, go touch some grass, go do something, go for a walk, take a day or two off. That's totally normal. Trading the markets is very stressful, especially trading the lower time frames. And the lower time frames is not for everyone as well, right? A lot of people, when they start trading the lower time frame, they're still looking for massive swings out of their positions, and that's just not how we trade the shorter time frames. So it can lead to bad habits. It can lead to over trading, revenge trading, over leveraging, all that sort of stuff. And that can really lead to a downward spiral where you blow up an account very quickly. So try don't do that, basically. Have strict rules. If you lose a certain amount of trades, you have to take a step back, consider, downsizing positions. Again, if you're upset about a loss, you're putting in too much money. That's all there is to it. If you can't have a proper stop loss because it's too far away, then you're trading with too much money again, or not waiting for proper levels. Getting to this little 786, 886 fib pocket. Again, not a ton of faith in this one, just because we still have those higher buy signals, and as well, this is pulled off a higher high signal rather than a higher or a lower high. It still might hold, but it's just there's more. This isn't a perfect signal for the kind of setup that I like, is all. ETF could be fuel for the dump. Yeah, absolutely. I wiped an account a bunch of times over trading the 1 minute. Yeah, absolutely. I think that's very normal. Again, trading the 1 minute is not for everybody. It's totally whatever works for you, right? I mean, I do these streams. I love looking at shorter time frames. I love watching the colorful charts. That's more my jam. I like to know, usually like within a few minutes, have a pretty good understanding of what's about to happen with my position. Like this one, yeah, very quickly started de-risking just because it was looking like a riskier position, right? But able to do that very quickly. And when it comes to trading like the 4 hour and stuff like that, I have a harder time keeping a level head. Most people have an easier time because you don't have to react so quickly and all that sort of thing. Because realistically, you're trading the 1 minute, even the 5 minute. You can, by the time you notice your trade set up, you take your trade, set your stop losses, set some take profit levels, and all that sort of stuff. If you're not quick on that, if you don't have your orders and your position and everything set up within the first minute, if you're trading a 1 minute, there's a chance that position is come and gone. If you weren't ready for it, like sometimes you only have a minute or two to react. And that's something that a lot of people don't understand too. Like, hey, if I enter a short base on this fib, but all of a sudden we pull away from that fib and someone gets in 2 or 3 minutes later, it could be a very, very different trade setup at that point. And that's where, I always say reacting over predicting anytime, and trading the 1 minute and stuff like that is just a perfect example that things happen very quickly. You need to be, if you're trading shorter time frames, you need to be very quick to react and very quick to set orders and all that sort of thing. It's all got to be very, very quick, right? And that's not for everybody. A lot of people want to take the slower approach and just like, yeah, I can think about this for a few minutes and I can take my time setting orders and that sort of thing. It's all whatever works for you. I like more of a get in, get out kind of an approach, at least with part of my position. So I know I'm risk free after that. But I have a hard time hanging on to those swing positions. I just know myself and I panic because I never know what's going to happen in the market. There could be some sort of a black swan event or anything. Something can happen. There's just more time for something to happen. Generally speaking, the TA works the same. It's just there's more time for something to happen if something is going to happen, right? See, Paulie, welcome. You're looking at the stream on another device, doesn't show up immediately at my live feed. Are you looking at do you just mean there's at the start of the video there was a bit of a pause, or do you mean that not sure what you mean there? But it seems like you guys can hear and see me. Hopefully. Yeah, anyways, guys, I think that's all I really wanted to go over today. I do have a couple things that I want to get going on here. So hopefully you did find this stream useful. If you appreciated my take on the market and, some of these trading strategies I'm showing you and all that sort of thing, do me a favor, hit that thumbs up, subscribe to the Financial Summit page, as well as my own YouTube channel, Stu Trading, all one word. Again, if you like these indicators that I show and you want to see more of them, you want to test out some of the other ones, all that sort of good stuff, there is a 10% additional discount down below. That's on top of current MDX ALGO promotions. So that's with the discount link down below in the description. So with that, hopefully you guys all enjoyed this. Hopefully all of that makes sense, how I'm talking about market structure, looking for those Fibonacci pullbacks, all that sort of thing, how I use the indicators. Just the thing is, guys, a lot of people just use indicators as a desperate attempt to get trade signals, where as I showed this stream here, I also like to use them for risk management, right? Something came in here that caught my eye. Hey, I'm downsizing my position. So even, even if I'm still right on the position, I'm just not comfortable with it. So I'm downsizing it. if nothing else. And I think that's an important thing to consider as well, right? You can use these things as risk management as well as coming up with strategies for entries and that sort of thing. So yeah, absolutely love these guys, love coming up with strategies with them and that sort of thing. But yeah, be sure to subscribe to this channel. And as well, like I said, my own, I do live streams on both of them. I go over some of my trade strategies, market structure, what I'm seeing in the markets, why I've been so bearish lately while nobody else has, all that sort of good stuff. So be sure to give a follow, give a thumbs up, and yeah, hope to see you guys on the next one. I hope you guys did enjoy this. With that, I'm out. Stay safe, my friends.